Chicago is more of a median sort of city here because they start from average between the 2022 and 2021. The blue line is in between, slightly weaker than 2022, but it is sort of maintaining the trend of last year. Cleveland started much stronger than 2022, but it nosedived in the last 4 weeks and kind of following the 2022 trend now. Dallas started a bit stronger and is kind of maintaining the last year trend as well. Denver is very similar to Dallas. Detroit started weaker than 2022 and got even weaker than 2021, and it is catching up to 2022 level. Let's look at 12 weeks. It kind of stays in the middle, more closer to 2021 range. It has lost quite a bit of equity since 2022, like 6%-ish. That's what it shows. Las Vegas is pretty much the same. Started very similar to 2022 and is somewhat a downtrend, but it's maintaining at around just below $400,000. Miami is another anomaly. It started very strong compared to 2022, and it is following the trend, and it's going 10% of beginning of the year when the interest rate was lower than 7% like now. And so this is very unusual, but they're getting a lot of influx of population due to whatever the reason, and the real estate market is doing amazingly well. But then if you look at the year-over-year trend down here, it's kind of flattening out a little bit. So we'll see, but it's still it's close to 7% right now. Minneapolis metro area, the Twin Cities, started stronger than 2022, and it is downward trend, about 2% higher than 2022. New York, kind of similar story. Started similar to 2022. It is downward trend, maybe 1 to 2% compared to last year. Now, the Phoenix has kind of interesting curve. It appreciated quite a bit, like 23% at the peak market, but then at the end of the year over year is just 1%. So it was like very hot summer, very cold winter, and that is kind of like comparable to even 2021 level. So it went down a little bit, quite a bit actually, during the fall and winter market, and it started from there in 2023, and it's even going lower. Now, my town Portland, sort of like similar to the national trend. It started stronger than 2022, but it's below 2022 level, about -2% now. San Diego is the same story, very similar to 2022, kind of like maintaining. Now, San Francisco is another anomaly. I think this is like third or fourth anomalies, but they basically started weaker than 2021 level, and it stayed that well. Now it's sort of like a following slightly downward, but following the 2021 trend. Now, 2021 had a very low interest rate, so I doubt that it's going to follow this trend. I'm just predicting something like this kind of, more of an even level. I'll be very surprised if it follows 2021 trend. My guess is maybe the average of 2021 and 2022, but more like a moderate. Their median price is $1.35 million, which still doesn't make a lot of sense to my head. Seattle is the same way. In 2022 level, it's going downward. Tampa is just like Miami, a little bit cooler than Miami, but still hotter than most of the countries. So this is another anomaly in my opinion. Now this is very close to the national trend. Washington, D.C., very similar to 2022 trend. This is mimicking that 2022 trend. So based on all the data that is available currently, the best case scenario is that if unemployment rate comes in higher than now, and if the stock market and crypto market goes down a little bit and more money goes toward the real estate investment, best case scenario, in my opinion, it may increase 5 to 7% in 2023 because of the tight inventory. However, the worst case scenario, which I'm leaning towards slightly more, is that if the interest rate goes above 7%, which looks like it's going to be well likely, and then big institution real estate is being released, their book of real estate, it could flood the market by about 10 to 20% more inventory than what's available right now. And the pace of that could actually slow down the real estate market really significantly. In that case, I could see as worse as 20% value lost compared to 2022. And as always, this is not financial advisor because I'm not qualified to give you any financial advice. I'm just trying to predict what's going to happen in real estate market. So looking at best case and worst case scenario, it may lay somewhere in between like anything else. It may average out negative 5% compared to 2022. But again, as you saw in the 20 city data, it's very local driven data. So pay attention to your city, your metro area, what's going on in your market, and talk to a qualified and competent real estate agent to get a better understanding of what's really going on for the best interest of your real estate portfolio. I hope this gave you some good understanding and some of the key factors that's going to affect the real estate industry. Thanks so much for watching. Please hit that like button and subscribe if you enjoyed this content. I'll see you next time.